Today we have three very special panelists. We have Dan from Haste, Alex from Handcash, and Brenton Gunning from Run. I think we're going to get started. We're allowing each founder to just maybe spend about 30 seconds telling us about what their company does, and then we'll get into some questions about the state of scalable blockchains today. So Dan, how about you get us started here?
Sure. So my name is Dan Wagner. I am one of the co-founders of Haste Arcade. We are using the BSV blockchain to do some really unique things with micropayments and sort of paying out leaderboards for these games. So there's a ton of stuff that I could talk about it, but introduction wise, that's pretty much what we're up to.
Cool. Alex?
Hey, I'm Alex Agut. I'm the co-founder and CEO of Handcash. And Handcash is a company that gives a wallet to users that they can use to connect to apps and games. And we help through our SDK. We help companies to integrate micropayments in a very easy way into any kind of app or game.
Thanks, Alex. Brenton, what is Run?
Hey, everybody, I'm Brenton. Run is a company that helps apps and tokens be launched on Bitcoin. We have a protocol that enables smart contracts and tokens to be custom created, and they're extremely scalable at a low fee. And I've been doing it for a few years now. Before this was at Snapchat and Microsoft. So we can get into it.
Sounds good. And before we get into it, just a reminder to all of our participants here, if you have any questions for the panelists now or that come up, feel free to DM those to me or put those in the chat, and we'll take those into consideration for the course of this webinar. So thank you. So Brenton, what problems is Run solving, and why are you even using a blockchain in the first place?
Well, there's kind of two questions there. So why use a blockchain in the first place? If you want your app to have data that can move from one app to another app, this was a problem that I faced, at Snapchat and actually just in the tech industry in general, is your data gets siloed to one application. And so a lot of the early use cases for this are tokens and smart contracts, where you see people that own some digital asset, and that digital asset can move from wallet to wallet, from game to game, or application to application. And so that's sort of the fundamental core problem that blockchain solves, is a shared database for a lot of different applications to come to agreement, to consensus on what their data is. But then as for Run and what Run's trying to solve, well, a number of things. So one, it's way too hard to write smart contracts and build tokens today. That's true across all the blockchains. They all have custom programming languages that developers have to learn. That's a barrier. And also, we're built on Bitcoin SV, where the transaction fees are, really probably the lowest in the industry. I was just looking this morning, and even compared to, say, Solana, which is getting a lot of traction, Bitcoin SV still has lower fees than that, and that should even continue to decrease over time. So I think we have a platform that can, hopefully go the distance and really enable what blockchain is meant to do.
Well said, Brenton. So let's take a step back to kind of the beginning of Run. How did you decide to build on Bitcoin SV? And did you seriously diligence or consider other time?
Yeah, definitely. Well, my my former boss at the time was at Snapchat. He had me looking into different blockchains for maybe something we could do with really anything with Snapchat. And my conclusion, this was back in 2017, was that none of the blockchains could scale. That's still my feeling today. And then what happened was Bitcoin does have a very scalable base layer technology. The UTXO model is really perfect if it's allowed to be unblocked, but nobody was doing that. And then what happened is, through a series of updates, there was a Bitcoin Cash fork and then a Bitcoin SV fork. And Bitcoin SV has demonstrated that it's the most scalable. But also it's just fundamentally, it's done the things I thought that blockchains needed to do to really expand and be a platform for, really all the application data that needs to move across different apps.
Thanks, Brenton. And similar question for you, Alex. How did you decide to build on Bitcoin SV, and is what you're building possible on another blockchain or any other technology?
Yeah, well, we started on BTC, and the thing is that the first demo or the first, let's say, mock-up of Handcash that was a functioning product was on BTC. back in 2017, and it was a mess because the fees were not reliable. We didn't have reliable send and receive times, so it was a mess. So we had to look elsewhere. We went to BCH. Finally, then with the fork we went with BSV. But basically, it's because we want a network that scales, offers us very low transaction fees, and I think the best of all is Brenton just mentioned Solana. Solana is gaining some traction, but still is kind of something experimental that that goes offline like once a month. So it is something that we cannot afford to have 48 hours downtime in 2 or 3 months. So the very cool thing about BSV is that basically you get all the reliability that you have from the Bitcoin network that's been around for 13 years or so, with the lowest fee rate possible. And for a company like ours, it's great because we are specialized on payments, right? So we can have a payment network that's basically worldwide without having to get licenses here and there and having setups in every different country, be a monitors meter, whatever, because the nature of the network allows us to be peer-to-peer and also non-custodial and other stuff. So it's a huge leap in efficiency using this public network instead of having to build our own payments network ourselves.
Yeah, and so just to be clear, is there any other type of technology or blockchain that could come close to Bitcoin SV to providing what you need for Handcash?
I mean, we've looked elsewhere many times. I think the only thing that, the only reason why we could move away from BSV at some point would be because of, brand recognition or whatever. But it's something that I think with enough abstraction, and we're looking at stablecoins and other kinds of products, I think it will not be needed. So unless you want to build something that's a crypto-based product and you just want to, get a little bit of tailwind from the market, there's no reason to go elsewhere but BSV.
Cool. So Dan, we've heard from Brenton and Alex and how Bitcoin SV really provides like a scale that they haven't really seen possible in other blockchains. And I'm curious, for you, what does scale really mean for your business? Is this transaction volume, payments, data storage? Why did you end up kind of all the different technologies you can use to support Haste, choose BSV with scale in mind?
Well, I think the number one reason is that we're very focused on like sort of mainstream gamers. So we're not particularly focused on the crypto crowd. And, crypto I would say is still somewhat in its infancy. Like we haven't found something that actually truly scales, which is, we believe that blockchain is BSV. And again, the gaming market is massive, right? Like there's so many people that are out there that casually game. And so even on the payment side, the transactional side, we need scale, right? Like, because the nature of what we're doing, everyone says this, but like in gaming, something could go viral very quickly. You have casual games that, get out into the marketplace and within months have hundreds of thousands or millions of users. We couldn't afford to take for what we're doing, we couldn't afford to take the risk of building it somewhere that we didn't think could scale today.
Got it. So Brenton, what does scale mean for Run?
Well, my frame of reference here is, traditional Silicon Valley companies where your scale is, 5 exabytes a day of data flowing through your system. That's what, we used to do at Snapchat. That's, I'm sure Facebook dwarfs that too. That's the scale we really need to reach if blockchain is going to go mainstream. That's what people expect. That's how you keep the fees low. So, every other blockchain we're talking, even right now, I think BSV is doing gigabytes a block, and that's not even close to where things need to be. So the good thing is that when you come at it from that angle of how do we get essentially unlimited scaling, the solution space really narrows, and things like the Ethereum approach where you have a single computer running transactions one after another, not parallelizing them, setting aside some of the off-chain technologies they have, that's not going to work. And so essentially, it should be a non-issue. You shouldn't think about scaling as far as the base layer blockchain goes. If you're building an application, it should just be given if the fundamentals are right.
Makes sense. So Alex, what does scale mean for Handcash, and how specifically does that relate to the concept of micro or nano payments?
Oh, it is a huge deal, because the smaller the payments, they are, the higher frequency we see. So, for example, it's very hard for a user to be paying like 1,000 times $5 to per day, right? But if you want to go like something like Haste does, that has to split $1 with 100 people, and it has to be this quick. And it's not just one people paying 100. It's just that we are processing in parallel those dozens of payments that are triggered to multiple recipients every time. And we're talking about pennies or sub pennies. And it's something that's very stressful for any network. And it's not just the network, but also you have to, we have the UTXO model on BSV. And it's something that, with state-based things like Solana or whatever, doing things in parallel sometimes can get very tricky. And, you can talk about, 50,000 transactions per second, but the reality of the situation is how many in the real world can you process in parallel at this, at this volume of usage. I think it's something that we can only do on BSV right now. And for us, it's critical to have a network that, is so flexible that everything we throw at it, we never touch the ceiling.
Yeah, so you're talking about a lot of new types of ways of doing commerce when you have these incredibly low transaction fees. Like, I think for perhaps a lot of people on the call, the idea of sending $1 to 100 people, doing it super quickly, and then still being able to make a profit margin is like, wow, where is that even necessary? Why? Dan, could you tell us a little bit more about the Haste model, ILP, and, both for Haste and gaming, and more broadly, the types of new business models you're excited about that are only possible with a scalable blockchain?
Sure. I mean, the micro payment concept in general is just so fascinating to me. It's ultimately why Haste Arcade exists. Joe, one of the other co-founders, and I were sitting in the office one day, and we had gotten quite frustrated with sort of what we were seeing in the crypto space in general, and in that most of these things had just basically become speculative assets that people were gambling on. And there wasn't like a whole lot of utility, and the chains that did have utility had these like crazy fees. And so when we saw what was happening with BSV, we had been following all the different forks and stuff, and we were just like, out of frustration, really, we were like, how could we abstract the complexities of crypto and give the world something that everyone understands? Like, at this point, everyone understands casual gaming. Everyone's played, whether it's Candy Crush or, pick your favorite mobile game. And we're like, what would be a cool mechanism for actually distributing a micropayment? And for whatever reason, we came up with this idea of distributing it to a leaderboard. So the concept is very simple. Think about your old school arcade game. You put a quarter into the machine, and in that old school scenario, you're basically competing for for fun, for entertainment. But then you're also, there's a little bit of ego aspect in that. Maybe I get to leave my three characters, my 3-letter initial on the board, and someone else is going to try and compete in the future. Well, it's basically taking that idea of having a leaderboard, but now every time someone comes in and plays after you, you're actually getting a cut. So the mechanism for which we are going to distribute these micropayments in a way that people would be easily understood was through this, what we called ILP, or instant leaderboard payout. So we feel like, we basically coined the term ILP gaming. But I think to your question, Zach, it's like this concept of, being able to break up even a penny into like much smaller parts. Obviously, you can break a dollar into more smaller parts than you can a penny, but it really has application even outside of gaming, right? Like there's, you can, I think with this ILP model, in a sense, you can gamify any type of event, whether that's digital or physical. And so we're certainly excited about, how this ILP concept could play out in the physical world as much as we do in the digital world with what we're doing with gaming. But yeah, I mean, micropayments in general, I have to actually try and contain a lot of the ideas. I'm definitely a creative mind, and I have a new idea every day. But yeah, I mean, micropayments and micro subscriptions, we can, if we look at most SaaS models, we see things like, I would say the most common is a monthly subscription. But my mind is going towards what sort of services can we provide online, where we have hourly subscriptions, or even I'm subscribing to some sort of stream that's by the minute or whatever. And these are all things that really it's never been possible until this technology. And so, yeah, I just think I think the future is very, very bright for micropayments.
Awesome. And, back to the micropayment king, Alex, what are some of these other business models that, you think you're excited about, you're going to see widely adopted over the coming years, only possible with kind of, a system like Handcash or Bitcoin?
Yeah. Well, we've seen one of the great examples is this new business model that Haste came up, which is the ILP. I think it's something pretty awesome. But more than business models, I think there are a lot of I would say that they are still pretty normal business models, which are just pay to unlock things or pay-per-view. That the problem is that they've never been possible at a very atomic scale. Just say like you enter the New York Times and everybody has done this, right? That you are on Twitter, you see that there's trending a new article, whatever, you enter the article and it's a New York Times premium article. And if you want to read it, you have to subscribe for the New York Times for a year and $9 a month or whatever, and you just want to read the article. So what happens? I'm betting, I don't know their numbers, whatever, but I'm sure that 99% of people just go back to Twitter and don't read the article. So they're leaving a lot of money on the table. So what we think is that if you create a very frictionless way of, you enter the New York Times, there's a premium article, and you have two options, right? The cool thing about this is that you can offer it as a secondary option instead of trying to bet everything on a new business model. You can have both business models at the same time. So you can offer things like, hey, pay 10 cents to unlock the article or subscribe to the New York Times. So I think, they don't have to change their business model per se, but they are just adding more ways of making money without having to, to gamble it on a very experimental thing with our micropayments right now. But certainly everything that, we are seeing that a lot of people are, creators, and not just content creators. I think for the way that the internet has, or at least the payments on the internet go, only content creators and users are being part of this economy, but nobody's talking about the content curators. So there's a lot of people that follow very cool accounts or whatever. I like to think myself that I am one of those. I think I like the selection of accounts that I follow or I'm subscribed to a lot of videos or whatever. And those people do not get rewarded in the market because, there's no way of, you have referrals or whatever, but it's not something that's kind of universal. So if you add a nano payment and just for sharing things that you think are very cool with others, maybe the creator gets paid and you get paid too automatically in these networks. And I think that the key thing with micropayments, we call them nano payments in our environment, because normally people have come to understand micropayments as a payment from the user's pocket to the company, and ranging from $1 to $10. So we're talking about many less than $1 payments that do not just go to the company, but also go back to other users. So I think that's why maybe a new term is necessary.
Thanks, Alex. And one kind of last question for you. It's something that I get asked a lot and think about, which is basically what's the future of how do we pay for content? The vast majority of content, whether it's music, New York Times articles, we pay for with our attention and with advertising. And it's always this big question of clearly advertising is not going to go away, but what percentage of the market do you think in 20 years will be micropayment based payment businesses models versus advertising? I'm personally of the perspective that it's going to be, more micropayment than advertising, but we'll see how it all plays out.
I think so. I mean, if you could replace, spending 20 seconds, trying to close pop-up screens and whatever, and having a lot of stuff on the screen, or even annoying in your phone as you scroll, or seeing a lot of ads that maybe creep you out because of the data they collect from whatever from other places. I think if you can just do this action and it's paid, or just tap and it's paid, and it's just 1, 2 cents, 3 cents, or whatever. I think once we get to have a tool that's as popular as something like WhatsApp or PayPal or whatever that everybody has on their phone or on their computer, everything is going to. It's going to be a majority of micropayments. I think we will still have ads, but I think it's going to be the ads, the advertising industry that's going to be adapting to micropayments and not the other way around, because it's very convenient, and basically if you are not just paying, but you're also earning by being there or offering your GPS data or whatever, basically it feels for free to you, but everybody's making money.
Yeah, well said, Alex. So Brenton, it's hard to talk about scalable blockchains in 2022 without kind of diving a little bit deeper into Solana. When we're a scalable blockchain fund, one of the most popular questions I get is, what do you think of Solana? Or why aren't you investing in companies building on Solana? So Alex mentioned before that Solana goes, unstable about every month. As more people use it, the instability actually increases significantly. We've seen it go down many more times than once a month as the adoption has grown. Can you share why, from your perspective, the network is so unstable, and if you think it's fixable? And maybe that could kind of lead us to Dave's question from earlier on, what is a UTXO system? Why does it differ? And, why did you choose it? So I know that's a lot, but I think you can handle it.
I can try to give my best here. So Solana has gone down several times since the beginning of the year. The root cause for why Solana is going down is because the consensus system, how all of the nodes on the network come to agree about what happened. It's based off of BSV in comparison is based off of competition. Where if there's a slow computer out there, well, they just lose out. And in comparison, Solana is built on cooperation, where everyone has to agree on what happened. And if there's some kind of backlog of transactions to be processed, or maybe there's an overflow of transactions that nodes can't keep up, they get out of sync and they start disagreeing about what actually happens. And the end result is that the network has to go down, everything has to sync back up, and then it resumes. And is this solvable? There's smart people, of course, working on it. I'll never say no, that it's not, but I will say I'd put my trust more in an economically driven system where competition to try to be better than the other nodes of the network is what drives it. I think it's more likely to succeed. And so that's Solana's downtime issues. But
and Brenton, let me just interrupt you with a clarifying question. So you're saying you want to invest in systems where there's an economic incentive to improve the network. Great, that sounds nice. Who wouldn't want that? Can you share more specifically why blockchains like a Solana or Ethereum don't have that?
Well, they do in an extent, but the problem is that when you have a proof of stake system and all of the nodes have to agree about what happened in the next block. If they don't agree, they don't move forward. And so you're always stuck with the slowest participant in there. Now they have ways of correcting for that. But there's always this problem of, well, if someone lags behind the rest of us, they can come into disagreement, and then the network won't agree. In comparison, Bitcoin SV's model is based on proof of work, where every miner on the network is trying to outcompete the rest of them in getting out the next subset of blocks. They don't have to agree with anybody. They just have to declare what it is the next block will be and make sure that other nodes know about that. And if they're the fastest, they're the ones who get the money for that block. That's just a fundamentally different system. I think your second question was about the UTXO model and how that is different from the account model. I'll try to not get too deep in the weeds here, but
most people on this call, not technical investors, just looking to understand blockchain.
At a high level, these are two fundamentally different ways of doing a blockchain, and every blockchain can be categorized into UTXO based or account based, and it's one of the two. I have an exception in my head, but that's generally the case for 99% of them. And really, these are two ways of representing the data on the network. So in an account-based blockchain, like Ethereum, like Solana, like Flow, really you get on the list, the majority of the blockchains are account-based. Users on this blockchain can be thought of as having bank accounts. They have, this is where the term account-based comes from. They have some account on the system that stores all the stuff that they own. And in comparison, in a UTXO-based blockchain, it's more like cash or property even, where individuals, they have claims over certain assets in the blockchain, but there's no sort of global account that these assets belong to. And the reason this difference is important is that when you have these accounts that are sort of the fundamental data structure that everything's happening with, you get the same problems that you have with, say, Venmo, where if I send you money and then you send someone else money, there needs to be some reconciliation. You can't do it too quickly because you need to get the money before it can be sent forward. And there needs to be some reconciliation process in the databases. Whereas in a model, the moment you have the asset is the moment you can transfer it. It works a little bit differently. So I hope that's not too complex, but can go more into it if people want me to.
Yeah, no, I think that's a good high level explanation. And I'll send something that Jack, who's also on the call, wrote on this called Only Cash Scales, which I put in the recommended reading as I think a good way to just really elucidate the kind of account-based versus cash or UTXO system, as it's a little complicated, but it's really no small thing. And it's kind of the basis for what I think the future of, payments, data storage, all these things that y'all have taught me about. So we're gonna get to a little fun one. Everyone's gonna answer this one. We've had a lot of folks join since I first started off. Thank you for joining. If you have any questions for our panelists today related to the state of scalable blockchains or their businesses, please throw them in the chat or DM me, and we'll take those into consideration when asking. So this is, what do you think the biggest misconception or one of the biggest misconceptions the average crypto or blockchain VC has? Dan, let's get us started here.
That is a fun one, given that we're talking to a lot of investors. I would say the biggest misconception, trying to wear that hat is, I don't even know if it's a misconception. It's just, I think one of the biggest issues in the way that people think about this technology is, it just feels so speculative, right? Like it feels like there aren't even on the chains that supposedly have utility, we're just not seeing like the level of adoption that you would want to see from a utility perspective, like an actual usage. I just feel like a lot of it is vaporware. It's a lot of, a lot of hype, a lot of, whatever. And I look at what we're doing. I look at the people that are involved, not only on, our team, but, what Handcash guys are doing, what Brenton's doing with Run. Like I always feel like I learned something when Brenton's on one of these calls. There's just some really smart people that are building in BSV. And yet there tends to be, because of, whatever social manipulation or whatever, there tends to be sort of a negative light around BSV, but it's like when I look at, again, like these use cases, these are things that are, stand to disrupt some very big organizations, in my opinion. You're talking about payments, and I don't know what the number is on like just like global throughput on a daily basis or anything like that. But when you're talking about disrupting that, I just think that that's very powerful. So I would just say that the biggest misconception is most people that I've spoken to, they only know the mainstream narrative, which is like these things are speculative assets, and I don't know if that directly answers your question, but
yeah, no, it does, and it's a really understandable mistake because when I'm talking to investors in blockchain funds, what I hear commonly is like, when they look behind the hood of almost any crypto or blockchain VC, on some level, there's a huge amount of exposure to this kind of speculative casino of DeFi and these crypto assets. So if literally almost every fund is offering that, I think it's understandable from their perspective that they think kind of that's the totality. And, that's why we're doing panels and webinars like this, so folks can kind of learn that there's a lot of entrepreneurs out there that are just choosing to use scalable blockchains to build a great business that solves real problems, that has, they don't have their own tokens. They don't need to create their own tokens. There's no kind of speculation required. So yeah, thanks for that, Dan. Brenton or Alex, big misconception.
Okay, I'll do it myself. I think, I think there are others that are maybe more common, and maybe Brenton will say these ones. But one of the most shocking ones to me has been the realization that consulting firms have been actively promoting private blockchains to their clients, especially to big companies. And the reason is that they are trying to scare them, like, all this crypto stuff, all this public blockchains is just a bunch of scams that will go out overnight. But if you buy my private blockchain technology, you'll be safe because nobody can attack you, 51% attack and all that stuff. So basically they are using the ignorance of the clients and also their own ignorance, because I've been in a consulting firm and I know that they know nothing about blockchain technology. And this misconception that a private blockchain, which is just a fancy word for selling you a good old database, it solves nothing to them besides making these companies believe that they are part of the future or whatever. So it's a huge misconception, and some companies that I know are being steered away from using public blockchains such as BSV because of this reason, because they talk to their consulting firm and they advise them to get a private blockchain, which is kind of an oxymoron.
Why is it an oxymoron?
Well, because the blockchain is meant to be a ledger where multiple participants can have use it as a notary for having a single source of truth. So if you have a dispute between multiple participants, you can always go to the ledger, to this public ledger, open and universal ledger, to check what is the truth and who said what at what time or whatever. It's not that everything that's on the blockchain is true, but you can see who said what at what time in any business agreement, and then you can realize if someone lied or if someone was being truthful, and maybe you can attach a hash to a document or whatever. But it has no, if you are your only participant in your blockchain, it's just a database.
Well said. Brenton, biggest VC investor misconception about blockchain today?
Oh, I think the point Alex made about the private blockchains is definitely in the line of what I was thinking too, that a lot of the benefits of having a blockchain is that it's a public blockchain, and that allows different apps and different assets to interact together. They're not siloed within their own ecosystems. And so I think that's a big part of it. There's another angle to that too, which is you have a lot of these blockchain connectors like Polkadot or Cosmos. Even Ethereum's long-term future is is predicated on this idea of having multiple chains or multiple networks that sort of interact together. And I can just say from the application developer side, that makes things very, very complex. And it's going to lead to people not doing it as much. That's the end result. Where applications that say you have an asset on Solana and you want to trade it on an Ethereum smart contract, good luck with that. That's going to be very, very hard. You're going to need to trust bridges in the middle that we've seen them get hacked even this year. A huge hack. Was it 500 million or something? It was extremely large, 300 million. And I think if you compare that approach of having many different networks versus, say, having very large single networks like BSV, and I'll throw out some other ones too. Solana is attempting to do that. Flow is attempting to do that. These, from an application developer's perspective, from a protocol developer's perspective, are much more attractive because they have a simplicity in their architecture that enables things just to flow around from one application, from one exchange, from one smart contract to another, without long delays. Like how long does it take to send an asset from Ethereum to Solana through a bridge? It's not instant, I know that. So yeah, I think that's going to be, if we're talking about real users, real applications that people want to use in their day-to-day life, that approach seems a lot better to me than the alternative.
Yeah, and for our audience to better understand, like really what it is to build on, say, an Ethereum or Polygon today, it might be advertised as, oh, I'm using a blockchain, but in practice, you're really using most of the time a few kind of centralized companies. Can you share a little bit more what it's like to build an ambitious application on Ethereum today and what's really involved?
Well, the majority of Ethereum applications are using a service called Infura. Infura is an API that provides access to the Ethereum network, and that is a central point of failure. If Infura goes down, tons and tons of applications go down, and that's a little disappointing because I think blockchains had the ability not to have to do that, where every application, if they wanted to, could have their own infrastructure. But yeah, so we see these central points on the connecting to the blockchain network. And the reason that happens, by the way, is because it becomes too difficult to actually interact with the Ethereum network. You're going to need to run a node. That becomes increasingly expensive. You can't have a light client like you can on say, Bitcoin SV. So that's one angle. But the other one is that you have these federated services or federated connectors that link the different blockchains together. And so, for example, say you had a token on Solana and you want to sell it on Ethereum, you have to deposit into a central federated service that controls that asset for you. Then they give you a token to use on the other network. And if that original asset ever gets hacked, you lose your money. So you end up, by not having the right base layer here, you end up introducing trust on some of the second layers or higher layers. That is, it doesn't have to be it that way. So yeah, maybe other people have other thoughts on this too.
Or maybe not, maybe. Alex? Yeah.
Well, on BSV, the cool thing is that everything we do is on chain, and every transaction for us is like we give it a thumbs up in about 800 milliseconds, and it's something really cool because you send the transaction directly to the miners, they only tell you if they are going to include in the block or not, and that's it. That's the most we use the blockchain for. And that's how we built this network of payments that we process like 1 million transactions per month, and it's super easy for us. And coming back to what we talked before about the public blockchain, I think the great benefit for us is that we are using a public blockchain. It's like tap water. You just open it up and you can use it, and that's it. And that allows startups like mine. We started working on this on a Starbucks in the mornings. So we didn't have to apply for a banking license or this or that or whatever. We just went innovating with payments, and we just had to kind of plug into this public network, and everything worked with other companies and with paying in this blog and here and there, whatever. and it's something that's, it removes a lot of friction and a lot of cost to a lot of companies, and it's only because it's public.
Alex, actually, I had a question. I don't know if you know the answer to this, but if you're doing 1 million transactions per month, I would be curious to know how many actually wallets or people are impacted by that 1 million transactions. Because I know like what we're doing at Haste, right? We're using a single transaction that can have up to, like literally hundreds of outputs in a single transaction. Yeah. And so, I mean, one of the challenges with like something like Solana for us was we needed that unique UTXO model in order to make what we were doing, work. Because at scale, it's like, let's think about it. In an account-based system, and Brenton, please correct me if I'm wrong. My technical understanding of like actual blockchain operations is definitely limited. But it seems like in something like what we're doing with Haste, and based on some of the developer conversations that I had with people at Solana, you would really need a separate transaction for each of those operations, right? So like the notion of having 100 outputs as a part of a single transaction isn't really a possibility. And so we really made the decision around like this could be an operational / support nightmare at scale, where let's say we have 100,000 people simultaneously trying to play a game, and what if one of those payments fails and you're trying to pay out 500 people on a leaderboard? Like, we need that single operation to basically say, what Alex said, 800 milliseconds, we know if all of those people are going to get paid or not. In an account-based system, we need to like actually go through, and we could have 30, if let's say 30 out of the 500, those transactions failed for whatever reason, that just becomes a web that we were not interested in trying to untangle.
Cool. I think the UTXO model, the cool thing is that you can compare it very easily, for people in the audience, to having bills and coins, right? So you can have, usually Handcash, every user has like, hundreds or thousands of small bills and coins, bigger and smaller amounts, that when they are using it on applications, we can grab from here to from here, whatever we can create a transaction very easily, and then everybody gets paid, and then they get more bills and coins, and everything gets arranged in this way. So we don't really have to go and update every single ledger of every single user and wait until we make sure that every single ledger is confirmed. We just send away the monies and bills, they get to the users, and that's it. It's much more easier to do than with an account-based system.
Cool. So getting to some audience questions now, and I'll start by just briefly touching on Creighton's question. So in terms of off the run, less obvious scalable blockchain that panelists are most excited about, everyone's choosing to stake their business, their livelihood on the future of Bitcoin scaling or Bitcoin SV. And that's true for me as well. When our fund first started, we did not invest in just the BSV ecosystem like we do today. We invested broadly across companies building on Ethereum, other blockchains. And then the more that we learned, the more that we felt that if we're investing over a long time horizon, really nothing is going to compete with a blockchain that gets cheaper over time as more people use it. And today there isn't another public blockchain that gets cheaper as more people use it. When you look at a Solana, an Avalanche, a BTC, Ethereum, all the blockchains that are getting maybe the majority of VC funding today, what we see is that the median transaction fee has skyrocketed as more people use it. And even blockchain networks that are much cheaper than Ethereum, if they were to get to Ethereum's volume and interest, they would actually be even more expensive than the Ethereum network, which today is the most expensive and most wasteful way of processing transactions in the entire world. So I think, I can speak for our panelists and for us at Unbounded, which is there's really not another blockchain that besides Bitcoin SV that we're excited about. It is less obvious, I think, coming from a more consensus perspective, given that it's not covered in the media or gets a lot of the VC funding the way that maybe a Solana or Avalanche or Polygon, kind of more up and coming ones compared to Ethereum does. But we really think it's the only one that has a chance of long-term success. But I think, for us at Unbounded, and I imagine is true for all the founders here and probably all the founders in our portfolio, is that if another blockchain came along that was competitive with BSV, that was super fast, completely secure, really cheap and getting cheaper, I think everyone would be looking at it and probably, diligence it first relative to the rest of the crypto world, given kind of the intense focus on scalability within our ecosystem. So thanks for the question, Creighton. Richard, you kind of ask around centralization being used to mitigate the failure of decentralization. I think kind of Brenton touched upon that with Ethereum. I think it's a great example of Coinbase really mitigating failure to decentralize. Dan or Alex, are there some other examples that you have of this? And to Richard's question is, do you think there's any hope of getting past these lies? I'll leave it to you to answer that one.
I think you see great examples with there's a new app that's called Strike. That's basically the only place where they are using BTC is in their marketing, but everything is just a database. And they have the money stored. They have some BTC stored in some accounts, and they have some USD, whatever. But everything is moving registers in a database, and it's what they are selling as Bitcoin everywhere. And it's a shame because they're it could be, I don't know, it could be any other kind of asset, and you still have the same infrastructure. It would not be providing any efficiency to anybody. And it's a shame because you still rely on them to actually make the payments, receive the payments, be here, be there, and take a cut by having deals with the government, instead of just having a free protocol that anybody can just use, any startup can get into. So also it's a shame because it removes every possibility of interoperability. If something like Haste wanted to be built on these kind of platforms, it's impossible because everything is like a closed database. And if they want to send the money away, it's a very slow and costly operation. So something like Haste couldn't exist. I'm not saying that this is not a good strategy for these companies, but basically it's all a marketing stunt because they are not really even using the technology at any point. Yeah, and it's a shame for them too, because they're not getting the gains or efficiency or new business models that they could have. But I think it's the safest bet if you want to use the Bitcoin brand tailwind.
Well, I think that's a great note to end on here. Really appreciate everyone in the audience participation, listening here today. And before we go, just kind of want to recap what these different companies do. And thank you for listening. So Dan, Alex, and Brenton, hit us with your 10 to 20 second, what does your company do, and why should people on the call care?
Yeah, so again, Haste Arcade, a cool way to, as a gamer, earn for being skilled at casual games. I think this is a concept that lends itself very, very well to this idea of micropayments and nano payments. It's something that I think that not only like hundreds of millions, like billions of people on the planet have never truly been able to do this, and that's how big the gaming market is. And so if you've ever found yourself playing a Candy Crush, any sort of casual game, just to kill some time on a plane, etc., you now have a way to actually monetize your skill and actually earn from that. So just very quickly on the last point of overcoming sort of the challenge of sort of these marketing campaigns that are going on against it, and like sort of BSV feeling like its backs against the corner. I've been saying this. I say this in most meetings that I'm in. I do think that there's a big short moment happening in the crypto space, and I think that BSV is that thing. It reminds me so much of that movie, if you've seen the Big Short, where the bankers and everyone that's fat and happy from their gains in crypto are sort of laughing at and pointing their finger, and you have this group of people that are just continuing to build, and they keep saying what is only logical and reasonable to me, which is value is going to be driven by utility, not speculation. And so I'm expecting, I don't know when it will happen, and I don't know the speed at which it will recover, but I do think that at some point, most of the speculative assets that we find in crypto land will come tumbling down in a significant way. And I think the things that come out on the other end of that. It was very similar to the .com boom and bust. There will be companies that withstand the test of time. And I think that those companies will be companies that are building things that actually create real value and real, utility for people. So.
Okay, thanks, Dan. Brenton, what does Run do?
Yeah, so Run is a platform to build apps and tokens on BSV. And really what we're trying to do is bring the programmability, the capabilities that people are used to on less scalable blockchains to Bitcoin SV, where things are more scalable. That's our goal. And it doesn't BSV in general doesn't always get the attention it deserves, but the fundamentals are there. The number of transactions per day, several million per day run transactions, and there's a lot of non-run transactions out there. That's no joke. That's you compare that to any app out there, and that's successful. So and that goes for everybody. Not just Run, but also Haste Arcade and Handcash as well. Everyone's doing well here, but hopefully, the market will take a look at it and we'll realize what's going on. But we'll just keep building.
Thanks, Brenton. Alex, let's close us out here.
Yeah, well, Handcash for users means, like being able to use new kinds of apps, just like Haste or DuraDocs, that, rely on these micropayments and game items that are on the blockchain, and they have real ownership of. And we make it easy for users to get started using this new kind of technology. When we started Handcash over 4 years ago now, time flies, we started it with the motto of Bitcoin for the rest of us. So we have in mind that we never try to be to condemn the crypto people, because we know that crypto people, what they want is the 12 words and these addresses and everything complicated and speculation and stuff. So we are basically 180 degrees from that. We are all about utility. We are all about creating value, and I think we provide a lot of value to companies that by using the great Run network that we use for our tokens. Thank you, Brenton, for creating that, because it's really awesome. It makes our lives much easier. And well, with that and the payments that we have and the SDK, we can create things like Haste or DuraDocs and great experiences that users like. They don't really have to really understand what blockchain is, whatever. Even my mother-in-law is using these apps and games, and she doesn't know about Bitcoin, and it's pretty cool being able to be part of this movement. And I think it's going to be one of the big things in the world in the coming decade. All the nano payments and micropayments integrated everywhere, and I think it's going to be a great benefit for humanity and our mental sanity, not being able to and not having to be tracked and having to swallow all these ads everywhere.